Hey everybody, it's Mike from Orderflows and welcome to today's video. Today is Saturday, January 21st, 2023, and it's a weekend, so it's a nice day to sort of go back through, the footprints during the week and, start to look for things, do your own research and, develop your own style of trading. And for me, watching order flow provides, in my opinion, the most direct and decisive insights into what's actually happening in the markets, right? Many traders, though, they tend to focus on a variety of indicators that their software packages includes. If you go to, NinjaTrader, you can just see, I use NinjaTrader, but if you were to go into, whether you're using any other charting platform, you've literally got hundreds and hundreds of indicators on here. Some of these, I have no idea what they do. And it's RVI, I don't know what that is. Maybe someone could, RSI, I know, ROC, rate of change, but there's just so many indicators that traders tend to lean on when you're just better relying on the order flow, which is not just price, because I hear a lot of traders say, well, you just got to follow price. Okay, well, order flow it's adding volume to price, right? So you're not just looking at price movement alone, you're looking at price movement or price action, if you will, combined with volume. So it's just taking it price action a step further. Okay, so really when you're relying on tools like MACD, RSI, Stochastics, DMI, you're just supplementing the way you should be looking at the market. Now, again, hey, if you're successful over time using technical indicators like DMI or MACD, then keep using them. But all I'm saying is see what you can use order flow for. If you could use it to help confirm trades, or or even non-confirmed trades, meaning you have an indicator flashing a buy or a sell based off of whatever DMI, but you don't have the complementary order flow with it. Maybe you'll learn to not take those trades. It's all about adding tools to your trading to help you become a better trader. And what I'll be talking about today is it's about volume, okay? Because volume matters, right? I know some people say, I don't need volume. I just follow price, right? I could just trade on my phone and follow what price is doing. Okay, fine, that works for you, great. But what if you can enhance your analysis and in turn improve your trading by just adding and understanding the volume that's going through, that's being traded at price? Because there are going to be instances. For example, this is YM, right? The mini Dow at the board of trade. So this is a 15 range chart, and again, it doesn't necessarily matter what time you're looking at, like a minute based chart or a range based chart or a tick based chart. You're looking for those times where you're seeing, abnormally big volume, okay? And again, this is not something that would appear very often, but when you're seeing it in the market and you could really wrap your head around what is happening, then it's just going to make you a slightly better trader, better than most, okay? So this is a perfect example. This is Friday morning around 10 o'clock. Again, it's a 15 range chart. People always ask me, what's better? Is it a range-based chart or a time-based chart? Well, it really depends on your approach to the market. You can't control the market's movement. All you can control is yourself, and how you do that is through the type of chart that you're looking at, okay? And, I just want to make one other point a little bit clear for some people that don't necessarily understand it. Your ATM, or your ATM, basically your risk tolerance levels, right? Your take profit, your stop, that's part of your trading plan is, what do you want to call it? A result of the type of chart you're looking at, right? If you're looking at, a 1 minute chart, you're going to have different profit targets and stop levels than you would if you're looking at a 15-minute chart, right? You wouldn't have the same targets or stops on a much shorter time frame, because if you've ever compared a 1 minute chart to a 15-minute chart, in a 15-minute bar you can get a lot of up and down movements, and you may be getting trades on that 1 minute chart that you're just not taking on the 15-minute chart. Anyway, I sort of digress. I don't want to go down that route. Save that for another time. But you can see here, okay, this market, it had moved up Okay, basically from 150 all the way up to just about 200 here. This is 200. And what happens? Okay, you hit 200, you run into some volume up here. Okay, market sells off. You can see there was 40 traded on the offer. Even went bid here, 53. 14 traded at 01, and it sold off. Okay, and it sold off literally almost about 50% from this low to this high. It pulled back into around the 70, 64, 70, and then it started popping back up. Okay, so 200 is probably it's a psychological level. 200, 100, 200 in markets like the Dow are going to be these levels. But when we sort of came back up, the difference on why this, in my opinion, why this market kept moving higher as opposed to here where it sold off, is it hit this level again, 200. And the first time you did have a decent sized bid coming in here. You traded 53 on the bid. You do have this buying imbalance of 40 here, right? You have a buying imbalance of 17. That looks bullish, right? You say, oh, I got this buying imbalance. It's bid here for 50, but then it dropped, right? Price action dropped. So it's not just price action alone. When you're seeing, I've had some aggressive buying coming in here. These guys are trapped, right? Next thing you know, we're trading, 10 points, 10 ticks lower at 90. Well, that's a good sign for you to get short, to catch, a nice move from 90 down to 70. And then we make another run back up here. Okay, the difference this time, you still have that buying imbalance at 200. You see the 50 lots. And again, it gets bid there. So again, you have a buyer stepping into the market. You had one here earlier. It just wasn't able enough to absorb whatever selling was taking place. Now you're seeing that absorption taking place. You see the selling imbalance of 75 contracts. Now it's 75. And it's holding this time. Here they did it for 53. It wasn't enough to hold. Market dropped. Here it's 75. It's pretty strong. It's enough to hold it. Market starts trading back up. What was interesting, when the market came back in here a little bit later, in the next bar, we traded down one tick above where you had that strong buying, right? Earlier you had that strong buying, but it just wasn't enough to support this market. Then the market comes back up to that level. Now these buyers are like, hey, you know what? We got to defend this area at 200. Market next bar opens up around the 06, 07 area, pulls down to 01 and keeps going higher. And then you see in here, right, this bar down here at the bottom of this bar, you're seeing nice heavy volume, 48, 42, right, even 18. So as the market starts pulling back, you're seeing strong buyers coming in here. This is these three price levels. That's about 100 contracts, right? 1/3 of this entire bar's volume basically traded between 10 and 8, 9, and 10, 18, 42, 48. That's supporting this market. And again, if you're just looking at a simple bar chart following price, you're not going to notice what is happening in the volume, right? Sometimes it's one of those things, in my opinion, watching order flow is a bit like watching soccer, right? Football, European football, where it's a lot of passing back and forth, and you're like, game looks interesting, but it's not until you get that, that flash of brilliance from one player that he gets the ball, dribbles up and scores, right? And it's like that with order flow. Okay, you just see this, a lot of back and forth, a lot of nothing happening, but then there's something you can really sink your teeth into, so to speak. Okay, and that's what looking at the volume is. It just makes it so much clearer. Now a little bit later, since we're I want to just talk about volume today here. What time was it? I think it was around 1 o'clock. I can't remember exactly. Losing my mind here. What is this? 12 o'clock. Okay, yeah, in here. Okay, you see the market, our high at the time was 333, 335, and we came up here. We hit this high up here at 25, came off down to 80, started coming back up. Right then, we're running into sort of a buzzsaw, stopping volume. I thought this market could potentially reverse and continue on down. Okay, but it did reverse, right? Because you can see this absorption up here with the 124, the 30, and the market reversed back down. And again, it went from, the low of this bar is 12. It only got down to 02, so about a 10-point move before it rallied back up and started making new highs. So it's like, well, Mike, you told me, there's heavy volume. You got to, expect the market to react to it. Okay. Yeah. This is a instance where I would expect it. People say, well, why you including it in the video is because, I want you to understand that just because you expect something to happen doesn't mean it has to happen, right? In trading, people's opinions of the markets change. We don't know. The thing is, right, when you don't know if the person that is selling up here is taking profits, right? I mean, this market had been rallying, and they could, 325 is a nice level. If they bought it 100 points lower at 225, well, yeah, they're happy to sell it at 125. You don't know why there's a trade taking place. We could just surmise and come up with our guesses, but we're just guessing at the end of the day, unless you're involved in that. But what you got to do as a trader is you sort of got to prepare yourself saying, hey, you know what, there's huge size. I'm expecting this market to go down. Okay. And it doesn't really go down. It goes down 10 ticks, which is basically not going down. And then it reverses and goes back up to new highs. Now, what was interesting, again, at this, right around this level here where you had the 124, just draw that line, this level here, is, so you had the seller here at 124. And again, I don't know who's selling. I don't know why they're selling, but I do know I got a strong volume there. I got 124 contracts. Okay. That's bigger than a lot of the volumes you're seeing, seeing over on a 15 range chart, seeing over 100 contracts at one price level in the mini Dow is something that you got to be paying attention to. Market rallies up to new highs, gets all the way up to 361, starts coming off. Okay. What was interesting is you see this 196. Now this was 124. Now this is 196 here. So we just hit the high. You got a big seller coming in. This 112, people say, well, what about this 112? Okay, well, that's on the offer on a market that's breaking out to new highs. That could be just resting liquidity there. I'm not reading too much into this one as opposed to trying to read more into this. But this 112 up here, in my opinion, it's just resting liquidity because, it's just sitting in the market right up there at 350. Also a nice psychological number. But anyway, we get all the way up to 361. Market starts trading down, and you see a big seller come in here, right? Close to 200 contracts coming in at the 44 area, right? This is 44. Putting my hands together, rubbing them. This is it. We're going to sell off because, we just made a new high, which is, nice to see in the sense of once you make a new high, you're looking for supply coming into the market. Supply is coming into the market. I'm looking for it to drop down. And what does it drop down? It drops right back down to this 25 area right here. This time you got a nice big volume there. You got some resting liquidity to arrest that move. Resting liquidity to arrest the move. Stopping volume, think of it in that terms. Now, I'm not saying that this 100 is somehow related to here. I don't think so. But when I see, even if I have something very bearish here, right, this 196, and the market drops, but it runs into volume. Now, this is an area, again, 325. What makes this area so important here is we were just trading there. So this 100 lots, this bid, so to speak, is coming in now. It's not like this 112 that's resting in the market, or even, this 124 that may have been resting in the market for a while as well as it's coming up. We traded 325 back and forth, rotate around it, traded above. Now someone's coming in after we trade away from it and coming in pretty soon to support this market. Okay, so even though I got this bearish information here, I've got bullish information. This is important, just as this is important. Now, that's the thing with trading is you can't marry your opinion. Oh, there's a big seller here. I got to get short and I got to stay short. We're going to sell off. You have to also be able to pivot, right? You got to be able to make that change in judgment saying, oh, okay, yeah, I had that supply coming in, but now I've got demand coming in. I've got support coming into this market. Someone's coming in here to defend this level at 25. And okay, so if you're making that step saying, yeah, I've got some support coming in here, you have supply up here at 344. You got to watch then is this supply, because we're not too far, 25 up to 44 is about 19 ticks. If we're going to come back up here, is the supply still going to be there? Because if the supply is going to be there, you're expecting to come right back down to 25. But this is the thing, right? This is where that taking it that step further, right? That analysis. Well, you just had supply here like minutes ago, right? This bar, is around 147, 148. This bar finishes at 151. So it's literally just minutes. If you don't have someone defending this price with supply up here, we're going to go higher because now you don't have anyone defending it. And what does it do? It breaks through and just shoots up past this level here, right? You just draw that line again. Just make it clear. 44 all the way up above 400. And it did it very quickly, right? You're talking 55. Okay, it hit that, came off, and then shot right back up through it at 159. By 10 minutes later, we're trading all the way up here at above 400. Okay, but you could have got, if you're getting long in here somewhere around 50, because that once you break 50, right? This level is 44. You break 50, it's off to the races. It's a quick 50 points in about 5 minutes, right? It did go higher, but I'm not saying, oh, look, you could have got how many hundreds of, 100 points out of it. Just be happy with the 50. You could have got more. Obviously, you traded all the way up to 459 from 350, but from here, 50, all the way up into the sideways activity here, is a good opportunity. So anyway, guys, I hope you guys got something out of this video. Reading order flow is a thinking man's game, right? It's as much as we love to automate trading, and I like to automate trading. I've got I'm working on with some trading robots from another company, so you might see some videos on that coming up in the future. But if you're reading order flow, it behooves you. It's in your best interest to understand what's happening in the market and put it together, right? You think, use logic, okay? And it's just going to give you an insight and potential. It's going to give you insight into the market and potential opportunities in pretty much any market. This is mini Dow. Last week I talked a lot about treasuries, tens, treasury notes, 10-year notes rather, bonds, e-minis. But now we're taking a look at mini Dow. So a lot of the same things would apply with what market you're looking at. So thanks, everyone. Be sure to subscribe to the channel and hit the like button. See you guys on the next video. Bye-bye.